So we're looking at the markets right now. We know that the S&P equal weight is actually coming off a record high. At the same time, we see a stock like SpaceX surging. Last check up over 8%. So do you want to play the broadening, or do you want to play tech and this new enthusiasm around the tech sector?
I think you want to play momentum, because you could find momentum in both of those types of strategies. First of all, let's keep in mind SpaceX options introduced today. That's going to add to the volatility that's currently in place. But you're correct to identify the S&P equal weight. I believe we have a new all-time high once again for the S&P equal weight. So momentum can find itself in different places. It could find itself in the AI trade and semiconductors. And guess what? It could find itself in Caterpillar. It could find itself in Edward Life Sciences. How about Monster Beverage or Williams Sonoma? These are four names that we hold in the Joe T ETF. They have nothing to do with technology. They have nothing to do with the AI story, but each of those four names are making a 52-week high. And I think that's the condition. I think that's the story in the marketplace today. I think that capital is moving away from energy. Capital is moving away from some of the defensive positioning, because yields 4.5%. 6 consecutive days at the beginning of June, that warranted some defensive positioning. Capital is now relaxing, and it's moving to a variety of different places, all with momentum as the common denominator.
All right, so obviously today we are seeing a bit of a pullback on the S&P and the NASDAQ. But Shannon, I want to come over to you. You say right now the markets have been propped up, obviously aside from today, by a three-legged stool. One of those stools, or one leg on that stool, I should say, is SpaceX and the enthusiasm around it. Joe just mentioned the options start trading today. Also, we've seen SpaceX surpass Amazon in market cap. What are the broader implications for the broader rally in the market?
Well, I think that there had been, a little bit of potential concern around the digestion of SpaceX, not only due to the size, but the fact that investors were going to need to fund their positions in SpaceX from somewhere. And so where was that going to come from? And how is the overall market going to adjust its thinking in terms of perhaps what's coming next? And so I think it's not just about SpaceX, Frank. It's number one, we're seeing a little bit of a pullback in technology. I would imagine that some of that is coming from the funding of SpaceX positions. You're not going to trim your healthcare positions, for instance, likely to fund your position in SpaceX. But number two, I think that there's an undercurrent where we're anticipating several other large IPOs this year. And then into 2027, it really clears the deck, if you will, for a spate of IPO and M&A activity that private market investors have been waiting on for some time. And so the fact that the markets have digested this very large IPO, the fact that we are seeing, some trading around that in other sectors and the potential for a broadening out, I think that that's a healthy reflection of the fact that perhaps we're moving back towards what we saw in the first couple of months of the year. The common denominator, I know that Joe said it's momentum. I actually think it's the rate environment. And I think that the more that we see kind of the pedal ease off of rates, we saw that with a softer CPI last week. I think that's really what you're seeing. So digestion, lower rate, kind of lower pressure on yields, and most importantly, what's happening in the Middle East.
Really quickly, though, you're saying the CPI report's helping the market. I mean, highest read in 3 years, 4.2 headline, well above the Fed target. Isn't that a risk for the market, the fact that it's so sticky?
Well, I would say the CPI report, the fact that it was actually in line to slightly softer on core, we're seeing meaningful improvement in services, super core, we're seeing shelter move lower, insurance, apparel, home furnishings. So all those other places of inflation that we had been worried about for the second half of the year, it going into the Fed meeting tomorrow, I think it's really critical that we think about the fact that now, with energy prices perhaps less of an overhang, or at least the asymmetry of meaningfully higher energy prices taken off the table, at least for the next 60 days, I think that that's what's giving the bond market some comfort, some solace, and that will, in turn, allow for this broadening out trade to revitalize.
So you're mentioning Kevin Warsh. Obviously, this is his first meeting where he's the Fed chair. We showed the chart earlier. If you look at the S&P since Warsh was confirmed by Senate and the S&P equal weight, you see the S&P equal weight actually outperforming, speaking to the broadening of the market, the S&P equal weight actually doubling. Josh Brown, I want to come over to you. First time you're on halftime since the SpaceX IPO. I want to talk to you about the enthusiasm around SpaceX and also some of this broadening that we're seeing.
Yeah, so I think one of the main things that I would say is that this is really a one-of-a-kind asset. Everyone is now very excited about space, and there are other publicly traded ways to quote unquote play space, but there's only one that involves Elon Musk, and there's only one with the level of revenue that's expected here. And it really is, it's almost like its own planet. And so I think what we don't want to do is watch the stock taking out new highs. I guess this is now the third day in a row since it's come public, and infer anything about any other area of the market. It's in its own world. It is impervious to conversations about Hormuz or interest rates or CPI. And clearly, there just was not enough stock out there relative to the amount of people that wanted to buy it and wanted to participate in this once in a generation, some would say once in a century situation. Putting that aside, I agree with Joe's opening remarks. There are so many stocks making 52-week highs right now. Not every stock, and the internals aren't amazing. There are a lot of S&P names that are negative on the year. But if we focus on momentum, we are not stuck with, do I buy SpaceX or not? We are no longer stuck in this world of, okay, I have to buy Korea and the 5 publicly traded memory names. No, there are names in almost every sector hitting my best stock list and hitting 52-week highs. And I think you're seeing crowding into those names because this is what people want to do. They want to own the winners right now. That's just the environment that we're in. I love the fact, though, that you can find those winners almost every different area of the market that you want to look.
You know, we're going to get to your best stocks in the market coming up just a bit later in the show. By the way, somebody did an amazing interview with the CEO of one of the companies that Josh picked last week. It was just outstanding. I'm not, we'll get to that part later.
It's a good tease.
Jenny Harrington, coming over to you. So are you going to play some of the enthusiasm around tech that really is focused on SpaceX today? We're looking at the SMH pulling back, looking at some other parts of the market pulling back, but more broadly, there's more enthusiasm, or the actual broadening that we pointed out?
Well, you know, Frank, I can't play it, right? Because we have really strict disciplines on all 3 of our strategies that are rooted in free cash flow generation. So the area where you could play, and also we're long-term investors, so we don't play. But I think it informs what we do, and it informs the positioning, and it's interesting. And when I think about what Shannon said about, you know, that it looks like the broadening really like maybe we get back to the beginning of the first quarter, and the broadening takes hold. And when I think about what Josh just said, which is you see stocks making 52-week highs in every area of the market, that's more when I'm thinking about like how to position, not play. But that's what I'm thinking about. So for example, you know, in our growth strategy, we've got Teradyne, and Teradyne's up another 124% this year. And so how do you manage that? Not how do you play that, but how do you manage it? So we have this, you know, 5% free cash flow hurdle, but the stock's been in there since it had a 10% free cash flow. Now it's down to a 1.6% free cash flow yield, but it still has amazing prospects with respect to AI. And so it's a very challenging thing to say, like, okay, can you add that for new portfolios? Of course, you continue holding it. Where do you trim it to manage the position size? So it's really like that's the challenge when we're thinking about it, is just how do you manage this? I mean, there's all sorts of weird stuff in there, too, like XPO's up 60%, Albany Investments up 40%, 50% on the year. I've got, you know, Postal Realty up 47% for the year. And I don't think these are directly AI, they're not SpaceX, but it is a bigger statement on how do you manage your portfolio when there are moves to the degree that we've seen this year. I was joking with a client earlier this week saying, you know, down 50% and up 100% is not the same as down 50% and up 100% as 5 years ago. You know, the way stocks move now, there's so much movement. So it used to be like, oh my God, a stock's down 50%, what's wrong? Like, hey, it might just be in that it's not loved as much and it's lost favor. It might not actually be something's terrible with the company. Stock's up 100%. Valuation's rich. Might still be up 200% more than that. Things are just moving differently. It's hard to manage, and it's hard to know what to do in the short term.
I think it's important to understand how dramatically sentiment has swung over the last week. Think about the conversation we were having 1 week ago. Oh no, here we go. We had this parabolic move in the memory names, in the semis, and the NASDAQ had gone parabolic, and it was the inflection point. We were going to see a reversal that was going to rival 99, and then here comes the SpaceX IPO. The boogeyman is coming. Mm-hmm. We're not going to be able to handle the supply. Well, guess what? We're on the other side of that. We were able to handle the supply because the demand was insatiable, not just here in the U.S. Japan, $2.5 billion. worth of demand and filling those orders. Europe, $2.5 billion as well. So I think what we saw last week was such a dramatic lifting of sentiment. And to Josh's point, you could right now look at SpaceX and say, okay, what we're seeing is that sentiment reflected in maybe excessive speculation. But that doesn't mean it damages the market. It's not as if, I said this to Josh the other day, it's not as if you are using a calculator and a pencil to figure out where SpaceX is going. It's just this really strong sentiment, and you could find opportunity everywhere. Jenny's talking about her strategy. I'm reminded a dividend strategy this year is up what? Greater than 10?
11 and change percent.
11 and change
It's
percent.
crazy.
So this is a very healthy marketplace, and I think that's the blessing of what we continue to witness, and we really got a grand example of it last week.